Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of September 9th. Each week I go through the same process, just looking at how I'm going to be trading through the week, whether I'm going to be long, short, how aggressively I'm going to be deploying capital. And I base this on a few different things. We can look at how the major indices are performing. We can look at our own trade and watch list performance, anything we've been watching, how have those stocks been acting. We can look at market health indicators, and we can also check out the sectors. So we're going to go through all of that. There are some watch lists on the website, or some lists of stocks you could check out. There's the best swing trading stocks watch list for September. That was updated right at the end of August and will be updated in another few days. And it has a strong and weak. So the strong ones for good market conditions, the weak ones more for trading when market conditions are weak like they are now, and those are potential short trades. So that's all explained in that article. There's also these other lists you can check out. So let's jump into how the indices are doing. So I look at a few different indices. We have the NASDAQ 100, the NYSE Composite, the S&P 500, and the Russell 2000, and then also the Canadian index over here in Bitcoin. And each one of these indexes from the US looks at a different segment of the market. There would be some overlap, of course, but they are looking at some different types of things. So I like to look at all four, and they give me a kind of overall view of how most stocks are doing. So the NASDAQ, quite weak. It had peaked here July. Our last peak, way lower, and then we had this sell-off. Very different than the NYSE Composite, which, here was the July high. We made a much higher high in late August, September, and now we've been selling off. S&P just below its prior high. Russell 2000 below its prior high. So when we think of, the basic definition of an uptrend is higher highs, higher lows, this doesn't really fit that definition at the moment to me for the NASDAQ or the Russell 2000 or the S&P, kind of on the cusp, but, we had this really big sell-off. We didn't make a higher high, and now we're selling off again. So that's more downtrending behavior to me. The only one that we could maybe make the argument that's still in an uptrend is the NYSE Composite. Much higher high. It is dropping right now, but it's still at, quite well above these prior lows. So there's at least some elements of downtrending behavior. If you don't like the downtrending definition, maybe you could just say, well, it doesn't exactly fit an uptrend either, which means maybe it's not the time to be hammering long aggressively. Now this can change very quickly. As we know, market conditions change. So I'm only looking at current conditions, and that helps me decide how I want to proceed. As conditions change, I update that outlook. So if things start to look better, then I update and say, you know what, I'm willing to go long, but until that changes, I am not. This would be more a shorting type environment, since we do have downtrending type behaviors in some of these indices. Lastly, Bitcoin. It's been moving in this descending channel for quite a bit of time. It had a big run up into this channel, and now it's just chopping away, and we're right near the lows of that. Even though we're at the lows of the channel, you can see it can drop even lower even while it's been in that channel, and of course it could break lower out of the channel. I'm not super interested in buying it here just because it's near the lows of the channel. I would much rather see aggressive buying coming in, see how the pullbacks respond. So kind of this thing that we had here, which we discussed. We had the big snap off the lows, had the pullback, and we didn't get the upside all the way to the top of the channel, which is an indication of a bit of weakness there. But still a nice pop. So I'd rather wait for this kind of price action, like we saw this big rally off the lows, and then buy in on the pullback. So that's what I'd be waiting for here. I'd want to see a nice strong move up, a pullback, and then if it starts moving up, that's when I'd get in, as opposed to just kind of buying here and hoping that these lows hold. Let's look at the market health indicators. This is a chart of the S&P 500. You can see I have marked on here follow-through days and TUDs. TUDs are what I call throw-up days, when they occur relatively soon after a follow-through day. And it's basically like that follow-through day gave us a nice thrust to the upside on higher volume, and a throw-up day is basically when we reverse. So it's a big volume, big sell-off day. And you can see, so we had our follow-through day in here, nice volume increase, nice price increase. And we got a little bit of a move, then we flattened out, and then we had these throw-up days, which are basically, high percentage move down for the S&P, close to that 2% mark or bigger, and higher volume. So you can see the higher volume coming in here. This was a pretty high volume day, as well as this one. So just something to be aware of. I've also thrown the percentage declines on here just to, highlight that a 4% decline isn't really the end of the world. We have lots of them, and this only shows the last year or so. Let's move on to the other ones. This is rate of change. This is how much the S&P 500 moves in a day in percentage terms. And uptrends are characterized by low volatility, low movement, like what we see in here. You can see I've put a band. The upper one doesn't really matter. The lower one's really what I look at, and it's when the S&P drops 2% in a day or more. You just don't really get that in strong uptrending periods. And when we do get these sell-offs of 2% or more per day, it's usually sustained. It indicates, there's a bit of craziness going on. Some selling or flatlining in the indices happens. Occasionally you get a 2% sell-off and then it just rebounds very quickly. But when that happens, the loss has been erased. But here we have some losses that have not been erased, and this is a bit of a issue that we want to consider. So we are in overall higher volatility. This is more characteristic of downtrending behavior as opposed to this much lower volatility we saw early, which is uptrending behavior. This is the NYSE advanced decline line. This is the only smiley face of all the health indicators, because it did have a nice run to new highs while the S&P 500 did not. That kind of makes sense. Also because the NYSE composite is looking stronger than the S&P 500. But even it's starting to roll over a little bit, so I would call this maybe slightly bullish to neutral. It was indicating strong movement. It broke out to new highs. We got a bit of that follow through. We got a bit of that bullish movement, and we'll see. It's still holding up pretty good, but it's no longer moving up. It's starting to roll over a bit with the other indices. This is up volume divided by total volume. Nothing recent. We want to see the price get to this very upper line or this very lower line, and there hasn't been anything recently. That just indicates extreme buying volume. If it hits this upper line, it indicates extreme selling volume. And I don't mean extreme in that it indicates a reversal. I mean it often starts a move because it's strong conviction coming in. So we haven't had anything hitting this upper or lower in quite a while. So if we were to hit those lowers, that's more indicative of downtrending behavior again. If we start hitting these uppers, that's more indicative of uptrending behavior, and we could start to see moves to the upside in terms of price. This is total stock, or this is the percentage of stocks above their 50-day moving average. And it's a crude measure of the number of stocks in an uptrend, and it's generally much easier to make money when you have lots of stocks in uptrends. Like this period here, you tend to get bigger moves to the upside, less choppy trading. When fewer stocks are really moving up, then it tends to be a little bit choppier. So and when we're below, that's usually when markets are moving down. So here we had a brief period where we got this rally and we had lots of stocks moving up. Now that's reversing again, and we're starting to see fewer stocks in uptrends. Only 44% of all U.S. stocks are above their 50-day moving average. S&P, or the S&P 500 stocks, doing a little bit better. Out of the 500 stocks, 58% of them are above their 50-day moving average. So overall, weak, pretty much mostly across the board in terms of the market health indicators. Another reason why I'm not a big fan of going long at the moment, but would maybe consider some shorts. In terms of the sectors, financial, healthcare, and real estate, technology was on there last week. Technology was the worst performer last week. It tends to be a big mover. So it's always one worth keeping on the radar, especially if you're looking at, this is main sectors to watch in terms of strength. And there's not a lot of strength out there right now. So if you're looking at short trades, you could start looking at these really weaker sectors. But financial, healthcare, and real estate are the ones that are holding up the best pretty much across all of these time frames. So we have healthcare, financial, and real estate near the top on the 1 week, which was, a pretty bad week, you could say, last week was. Financial, healthcare, real estate near the top of the last month. Real estate, the best performer over the last 3 months. Financial's up there, and so is healthcare. So those are the ones, if you're looking for kind of the ones that are holding up best, those are them. If you wanted to look for the weak things, you would look toward the bottom of these lists for potential shorts. So what I'm doing, I'll consider shorts. I've some nice triggers recently on the best swing trading stocks list to the downside. That's from the weak list, and might get some more if the conditions continue to deteriorate in the indices. I have no idea. I don't make predictions on that. I just trade what the market's doing right now. And there's also the option to always trade the Euro USD and stocks. With swing trading, we get these periods of action, especially if you only focus on longs. If you focus on shorts, there's a lot more opportunity. If you only focus on the long side with the swing trading, it's definitely flurry of activity followed by periods of inactivity. Nice thing about the day trading is that every day there's trading opportunities. There's also passive investing. So this is something I definitely focus on more I focus on it all the time because I'm passively investing money into index ETFs. But when the market's dropping or when the market's weak and there isn't as much activity on the long side, then that's when you can go through some of the ETFs or some of the companies that you really like in terms of their long-term performance. There is a list of, it's on the thing here, where was it? Yeah, best buy and hold stocks. So I have a list of stocks that are just high quality, tend to grow over time. It's really strong historical track record. So when the market's declining, you can focus, maybe if you're more of a long type investor, you can focus on those longer term things and maybe a little more focus into that, spending your time picking out which stocks you want to buy once conditions start to improve. And the passive investing, when indices are declining, it's actually not a bad time to passively invest some funds because it's basically cheaper than it was a little while ago. And with the passive investing, we're just trying to get the average returns over time. And so we're not actively buying and selling them. It's just continually adding more and more to our position over time until we eventually sell it near retirement. So lots of options for how to trade, and this week probably no long trades for me unless we start to see the health indicators and the price action start to look better. So have a great week out there, however you decide to trade it.